Good morning, everybody. This is the Live Market Open for Thursday, October 15th. I'm Yohay Elam, a Forex Crunch and Market Movers podcast, doing the show for FX Street like every morning at 8 GMT. Welcome, everybody. Today, as usual, we're going to cover recent developments. We had quite a few. Talk about charts and levels, the next 24 hours, and most importantly, your questions. Now, maybe you don't see the chat box on the where you're seeing the video, so you can just go to this address. It's https://fxstreet -forex-live -video. I'm waiting your questions. I see quite a few of you are in the room already. Okay, so let me begin with what the big figures that we had yesterday from the United States. So we had US retail sales just disappointing on all fronts. They were expected to rise in the headline figure, and they fell. And they were expected to show better than expected figures, rise in the core number, in the control group, in the X autos. No matter how you slice and dice it, the figures were just terrible. Okay, so we had a reaction. Of course, the US dollar fell. Together with the retail sales, we had a release of the producer price index, PPI. It also missed expectations. Okay, let me just show you the live calendar for yesterday. Let's see if I can get it quickly and show you that it's just miss after miss after miss. This is the FX Street calendar on Forex Crunch. So we had here, just a second, right here, we have the figures from yesterday. As you can see, a sea of red. Okay, producer price index, red. Month over month, the same. Excluding food and energy, red, missed. Retail sales, the most important figure, X autos, missed. Producer prices, again, retail sales, everything was negative. The only positive figure that came only afterwards, it was the business inventories one, and it isn't that important. It came an hour and a half later. So all in all, you can see this is the main figure. It's just negative. It was expected to drop by 0.1. It dropped by 0.3. It's also important to note that alongside all these figures, we had also downward revisions. For example, this one, reportedly, they rose. Retail sales X autos 0.1% yesterday. In August, and this was revised to a fall of 0.1%. Okay, so this was really devastating for the US dollar, right? All these figures. So this was the main theme in markets, and we'll see it how it evolved. This is the euro. Okay, so it rose very nicely up to above this level here. 114.60. I mentioned it many times in the past. Why? It was the high in May. The high in May, the high in September, and also 1,000 pips above above the really low level of 104.60 back in March. Okay, so we had the euro break above this level, but the euro actually stands out today because look at this. This is what's happened in the past hour. So what's going on here? Euro dollar changed direction. Why? I think that each time that we see euro dollar rise too much, we have some kind of verbal intervention from the ECB. Okay, the European Central Bank doesn't want it. It wants the lower euro. A lower euro helps exports, and it also makes imports more expensive. So it lifts inflation. Inflation in the Eurozone currently is just too low, and it's minus 0.1% outright deflation. Okay, so you can blame it on oil prices, but also if you look at core inflation, it's only 0.9%. We'll have the final figures for September tomorrow morning. They probably will not change too much from the initial report, from the preliminary one, but in any case, it's just too low. And Evald Novotny, the head of the central bank in Austria, a more rich country, a more sort of more orthodox central banking, more related to the German way of thinking of fighting inflation. This morning, just less than an hour ago, he said that inflation is too low and they'll have to use more instruments. So far the ECB was sort of hesitating, not so sure. Maybe we'll act, maybe we'll not. Now we hear a much clearer wording, and this is the reaction here, and you can see it on the screen. Boom, we fell from 114.94, we almost reached 115, all the way to 114.24, and now we're at 114.40. The euro is sort of beaten, looking for a new direction. But this is the exception, not the norm, because if we look across the board, yesterday, if you remember, we had retail sales numbers, employment numbers from the UK. They were a bit under expectations, nothing terrible, but a bit under. Nevertheless, pound dollar cable rose very, very nicely, and it's right here. It reached, just touched 155. So now it's sliding also maybe alongside the euro, but all in all, the trend is much clearer than in the euro, that we see a much sharper fall. Okay, dollar yen broke actually out of the narrow range finally. Is it a real breakdown or just an extension of the range? It's still early days, because like the ECB reacted to the fall of the fall of the dollar, the Bank of Japan might act as well. So 118.70 was the level. Currently we're lower, 118.33. The low so far was 118.09. It's sort of support at 118. Below that we have the swing low of late August, when we had this breakdown in the stock markets, when we had the Chinese crisis. So that's still far away. I'm still waiting a confirmation if we broke out of the very, very narrow range in dollar yen. Let's move to dollar CAD. Here we had, that's a rise to 134.60, the highest in 11 years. A fall here to 129, which served as a double bottom. Another rise to 130.70, tackled twice. Also, you can call it a double top if you wish, early in the month here and this week. And now we're falling below this level. So the low so far has been 128.70, and currently we're a bit above it. We're seeing in the last hour, so no, just seeing a rebound. But all in all, the Canadian dollar enjoys the weakness of the US dollar more than anything else. But today, later on today, we have crude oil inventories. It comes from the US, but it impacts, of course, Canada. Canada is an exporting nation of oil, is influenced very much by prices of oil. So if we'll see another big buildup, another rise in oil prices, we might see, another fall in oil, another build in inventories, which means weaker oil prices. We could see the Canadian dollar fall. That means dollar CAD rise again, but it's still to be seen. Australian dollar, very interesting currency pair. Look at these moves. So we mentioned this line, 72.80. That was the post-Fed high. We had the Australian dollar breaking above it and almost reaching the level of 74, then falling once again. We had poor data from China earlier this week. We had the 11th consecutive fall in imports. And a lot of what China imports is what Australia exports. So we had Aussie dollar fall all the way to around 72.50. And then it climbed once again. Is it on good figures from Australia? Not exactly, more on the US dollar. Okay, so let's look at employment figures from Australia and show you that they weren't that good. They were mixed. Okay, so the good news is that the unemployment rate remained at 6.2% and didn't rise to 6.3%. But the bad news is it came on top of a fall in the participation rate. Like in the US, we have low unemployment rate with low participation rate. It's much higher than the US, 2.5% higher, but still it fell from 65 to 64.9. And perhaps the most important figure in this context, is the total change in employment. We had a loss of 5.1 thousand jobs, 5,100 instead of a rise of the same scale. And the changes were more in the country gained part-time employment and lost full-time employment. Okay, so the news weren't so good out of Australia. We had the Australian dollar fall just a bit during the night here, but then it recovered. First of all, it's the strength of the US dollar, and then it's the Also, the fact that many analysts came out of Australia saying, actually, the Bureau of Statistics in Canberra has abandoned its strict methods. The data is not really correct. We're not so sure. So eventually, Aussie dollar shrugged that off and continued rising. So far, I marked this line 73.60. That's a line to watch on the upside, but 74 is more important. 70 to 80 remains a separator of ranges to the downside. Thanks, Pan, for your question. I'll just cover the Kiwi dollar and then I'll answer your question. So Kiwi dollar seems to have really no limits. 68, 70, and we almost touched 69. I mentioned yesterday that 69 is a line of resistance. Okay, let's zoom out to the daily chart just to show you. I mentioned the 69 was sort of here a separator, and no, it didn't play a role in the past, sorry. Anyway, this is a key line to watch, and above this, of course, we have the round 70 line. So everything looks currently good in New Zealand, including a business survey that came out. The manufacturing PMI was very, very steady at 55 points, 55.4. So New Zealand dollar is certainly taking advantage of the fall of the US dollar. That is related, of course, to the retail sales, PPI, and a few more things we'll mention later on. So, good morning, Pan. You're asking, can you look at pound Aussie and your opinion on relative badness of figures from each country? Well, I think the figures in, well, in general, both economies are doing okay. Australia didn't experience a recession in 23 years. They have better weather, of course. In general, the situation in Australia is of course, better than the UK. But the trend in Australia is downwards, and the trend in the UK is more upwards. The unemployment rate in the UK is 5.4, I think it was yesterday, and in Australia it's 6.2. So that makes a difference. And the direction of the monetary policy, that's the most important thing. The central bank in the UK is expected to hike the rates sometime after the Fed. That can take a long time, but that's still somewhere in the future. A rate hike in the Reserve Bank of Australia is set to cut interest rates. Now let's look at the chart and see what's going on. Here we have it. 210.50. So on the daily chart, we have a slide of this currency pair at the moment because the Australian dollar is rising. But the bigger trend is, as I mentioned, an uptrend. The UK is expected to raise rates. Australia is set to cut rates. So this is the general trend. Now, in the past month or so, we're seeing a fall from the sky-high levels of, where are we here? It was around 230, right? And we've seen it fall down just above 2, okay? 2 Australian dollars for £1. But now I think it's stabilizing. I still see this fall in the past few months, mostly related to the Chinese crisis, as a temporary fall. Sorry, the Chinese crisis, but confusing you right now. We had Chinese crisis give a boost, so we have the Australian dollar recovering, and that's what's pushing the pair lower in the past month or two, especially after the Fed delayed its rate hike. The delay of the Fed hike implies a delay in the UK hike, and this implies more cheap money floating all over the world, which goes to Australia. But in general, I do see the monetary policy divergence, a hike in the UK, and a cut in Australia as soon as November because of this move by Westpac, pushing the pair higher once again. Okay, so lines to watch here are 213.43. Why did I put that here? That was the low in September. And 220, first of all, it's around level, and that should be right here. And it was also a high seen also in September. So this is these are the lines to watch on the upside. On the downside, of course, we have the round level of 2, which was also support just a few days ago. Yeah, it's a bit maybe above this line. It should be right here. Sorry, that's 207. My bad. And below we have 205 and 202. So these are the levels I'm watching. I still see the bigger trend is up, but we've seen a big correction in the past month or so. So Pan says, thanks. It looks tempting for a buy on short-term charts. Let's look at short-term charts. At 1 hour chart. Yeah, we've seen it bounce off the lows. I would watch this line right here, 213, as if we break above this line, maybe we have a resumption of the uptrend, end of the correction. That's how I see things. Anyway, thanks for your question. Looking forward to more questions. Let's just remind you, if you don't see the chat box under the video, the place to go for the chat is this web address. It's tlk.io/fxstreet-forex-live-video. Okay, so I'm looking forward to more questions. Let's see also other reasons. Let's see first of all what's ahead on our schedule today. So today, contrary to other days, we don't have a major UK release at the bottom of the hour. So actually we have a quiet morning, but of course it gets busy in the US session. So at 12:30 GMT, that's 1:30 in London or 12:30 here in the old continent, we have the United States releasing its inflation figures, its CPI, Consumer Price Indicator Index. Let's see what's awaiting us. So headline number, year over year, we're expecting a drop of 0.1 in prices after a rise of 0.2. Of course, that's related to oil prices. The Fed ignores things that people buy like oil and food, but that's what moves markets. More important thing to watch is what the Fed watches. It's the Consumer Price Index core, ex food and energy, because of course we don't eat and don't drive. So it's expected to remain unchanged at 1.8%. Okay, so these are the trends. These are the big figures to watch. Markets will also be looking at the changes, the month-over-month changes, but I think this is the key figure, year-over-year core. Okay, that's what's going on. Pan says, we'll wait though regarding pound Aussie. Don't want to catch a falling knife. Yeah, nobody wants to catch a falling knife, and currently we've seen quite a fall in the past month. So yeah, we need to see it move a bit higher. Let's talk about more indicators that we have later today. We have, of course, at the same time, like every week, the jobless claims release from the United States. Let's see where it is here on the, yeah. So last week we actually had a great figure, 263,000, which is very low, less people claiming unemployment benefits. That's really great. So this time we're expecting it to rise back to sort of the mean, a mean reversion of that's 270,000. That's around the 4-week moving average. That's one of the figures that has been okay and steady and didn't disappoint recently. And at the same time, we also have the Empire State Manufacturing Index, which is right here. So this is quite volatile, but still important. Last time it was a devastating 14.67, minus 14.67. This time it's expected to rise to -8. Still negative. It is a bit it is a bit important because it's for October. It's for this month. It's published very early in the middle of the month. It's not for last month or for 2 months ago. I think it'll be a bit overshadowed by inflation. Later on today, we have also an early release for October from the Philly Fed Manufacturing Index. This carries more weight. First of all, it's published on its own without other figures, which means that it has more impact when it's released, and it's considered a more reliable indicator of the greater US economy than the New York one. So it's expected to advance as well, once again, from a deeper negative figure of -6 to -1. Okay, manufacturing sector is not doing so well. Services is still doing better. And just 30 minutes later at 2:30 GMT, we have two speeches. Maybe it's the same event. James Bullard of the St. Louis Fed, he's a known bull. Let's see if he continues talking about raising rates in 2015. Maybe he changed his mind after retail sales, maybe not. And more importantly, Bill Dudley of the New York Fed, who is a voter this year, and actually every year he's a permanent voter. And he was sort of centrist. In the end of August, he said, I'm not sure about a hike in September. And that was a hint for markets. Afterwards, in early October, he said he does support the hike in December. So let's see if he changed his mind after the non-farm payrolls and after retail sales. Okay, so these are the important events for today. Central bankers have the upper word, the upper hand, and the last word. Okay, and at 3 GMT, 3 p.m. GMT, we have crude oil inventories, which is right here. We're expecting another advance. Last time it was 3 million, around 3 million. This time it's expected to be a bit below. Anyway, for those trading the Canadian dollar, this is an important figure to watch. Okay, and for those of you trading the New Zealand dollar, the ever strong New Zealand dollar, we have at, well, that's already late here in Europe, at 9:45 GMT. The consumer price index, New Zealand, contrary to many other countries, releases inflation figures only once per quarter, making it more important. We're expecting year-over-year rise of only 0.3% and quarter-over-quarter of 0.2%. Sort of mediocre, soft figures, nothing to be too excited about. Okay, but that's what we're expecting in New Zealand. This might, if it comes out worse than expected, if we have a drop in prices, that might imply, well, of course, a rate cut is already expected in New Zealand, but it might stop the rally of the Kiwi dollar, which is quite impressive. Contrary to Australia, New Zealand exports more dairy products, food. People need to eat food more than they need to build factories. So that's what's going on. Good morning, Jake. Jake asks, what's the best bet for today? The best bet? Well, I hope you're not betting and gambling, but the currencies I'm focusing on is euro dollar. Let's see, because of this comment that I mentioned earlier of Ewald Nowotny, central banker in Austria, that talked about more action. This is a currency pair. First of all, it's the most popular one, but it stands out with the fall below this critical resistance line. It worked so hard to break above it, and it might turn out into another false break of this frustrating euro dollar. So let's see if we have more comments. These are not always scheduled comments by ECB members, and let's see if we have more action from there. I think that if we have an okay CPI, then we might see the euro extend its falls. Why? Because the euro rose nicely, and it's sort of mostly on bad US data, not on good European data. And if we have some stability in US data, we might see the euro fall a bit more. So I see it a bit as vulnerable, and also at a critical level, 114.60. So still battling here. The break is not confirmed. We still don't know if it was a false break, what we've seen last night. So this is the currency pair I'm focusing on today. Okay, that's the bet. I wouldn't say depends a lot on the CPI figures. That's the main event for today. Let's see what we have tomorrow morning, and it's before the show. We have in Australia the RBA Financial Stability Review. Let's see if the RBA is bullish or dovish. It's not such a big event, but it can move the Aussie. At 6:35 GMT, an hour and a half or so before the show, we have the governor of the Bank of Japan, Kuroda, speaking. Let's see if he hints about action on October 30th. We're just 15 days from the big event, and let's see if we'll hear from him later on. Okay, any more questions? Or we'll dive a bit more. I had an article on the website about the 7 recent developments that push the dollar down, that lower the expectations for a rate hike. I'll just have it in front of my eyes so I can talk to you about that, because it's not only the retail sales, it's also other figures. Quite a few developments that we had here. So let me just get it for you. That's, of course, except the euro. We're seeing so many currency pairs fall. Made the dollar fall against so many other currency pairs. And that's also just concentrated all the comments. For some reason, I cannot find it at the moment. Anyway, let's, in the meantime, look at a bit more at the charts. Pound dollar that we've talked about yesterday managed to break above 154. The levels above here are, let's look at this. Too many lines here, right? It's a bit of a mess. 155.20, then 155.60. But an important line maybe is this one right here. 156.60. Also a line to watch, because that was the high back in September. Let's see if I can. Any more questions? In any case, so let's talk to you a bit about all concentration about all the figures that all the events that hurt the US dollar, is sort of this accumulation of bad stuff. So we had Jeffrey Lacker. He's the only member of the Federal Reserve, of the voting member, that supported a rate hike in September. He dissented, and he said that he's still not sure about October. Okay, so nobody's expecting a rate hike in October, but it's still, if he isn't sure that he's going to vote for a rate hike, who is? Okay, so he's a clear hawk, and that's he said that yesterday. Daniel Tarullo, he is a member of the Federal Reserve who focuses on regulation. He hardly ever speaks about monetary policy, but also he said that conditions are not right for a rate hike soon, rate hike this year. He just spoke against the rate hike this year. Lyle Brainard, she has a permanent position of voting member as well, and she also hardly speaks about monetary policy. And in a speech that she made a few days ago, she made the case against raising rates this year, sort of hinted it more somewhere in 2016. So that's number 3. Number 4, Stanley Fisher, the vice chair, usually leaning, also permanent voter, leaning from the center to the hawkish side. He said on the weekend that you expect rates to rise in 2015, but that's an expectation, not a commitment. Again, not so sure, and that was before the retail sales release. Also, other international developments that we had is the Chinese finance minister also telling the United States that it has a bigger responsibility in the world and it cannot raise rates now. Of course, the United States can ignore it. The Fed officially cares only about the US economy, but in an interconnected world, everything can happen. And the words coming, such clear words from the Chinese finance minister, I'm sure they do have an impact also in Washington. The IMF, number 6, also warned not only the Fed, but other central banks. They want to keep the easy money flowing. They want to have United States refrain from a rate hike, the UK refrain from a rate hike, the ECB print more money, the BOJ in Japan print more money. Why? Because corporates in emerging markets have overborrowed. Why did they overborrow? Because of cheap money everywhere. The IMF wants more of that medicine, even though it can become a bit poisonous. And the seventh thing, last thing for now, is what we're seeing in bond markets. So let me put on that chart on the screen, and let's see if I can find it. It's right here. Let me share the screen, show you interest rate. This is a tool I recommend you to check out from time to time. Countdown to the FOMC, 13 days left. Nobody's expecting anything in October. So here are the probabilities implied by bond markets, okay? Of course, near 100% no move in October. December, it has risen from 63 to 67% against the rate hike. So bond markets are pricing in no move. January, no press conference, 60% against the rate hike. March, this is when a market's priced in a rate hike before yesterday's retail sales. Now it's 50% against the hike, so it's still sort of in doubt. And the only clear message is that we'll have a hike by April. But in April, we don't have a press conference. So more realistically, if we look only at bond markets, only at the implied volatility, we have a rate hike coming only in June. Remember that the Fed was lost its self-made chains regarding forward guidance already in June 2015. So we need more patience and things like that. And then we had from June, every meeting was a live meeting for raising rates. So now if we look only at this implied probability, we have a hike only a year afterwards. Now, economists still talk about a hike in December, but chances are fading away. Question from ERC. What bonds do you watch? Well, in general, I don't follow them too closely, but I do follow, in general, German bonds, the 10-year and US 10-year notes as well. I just sort of from time to time brush on the levels because there is, of course, a good correlation between bonds and currencies. Nowadays, it's not as strong. It's more like stock markets have a bigger impact. So in general, we still have this correlation. When stock markets go down, the yen, first of all, strengthens, and also the euro. When stock markets go up, the commodity currencies such as the Australian dollar, the Canadian dollar, the New Zealand dollar are on the rise. Also, the pound enjoys this kind of status. Okay, I hope that answers your question. Anyway, looking forward to more questions. We still have some time. Let's talk about other charts that we have here. So, dollar Swiss, of course, the fall of the US dollar actually triggered a breakdown under this level here. You can see 95.30 more or less, and we have the pair falling even below 95 earlier, 94.75. It's important to remember the Swiss franc trades very, very, very closely with the euro. So here, finally, some kind of move in euro Swiss. Because of this fall in the euro, we're seeing euro Swiss dip out of range just for a bit, falling to 108.57. That's relatively exciting for euro Swiss. The range in general is 108.70 to 110. We may see a breakout. If we see a breakout, 108.20 is the next level. Euro pound made it almost to 75 cents, but then the pound strengthened, of course. Sort of did a big comeback. UK economy is, oh, I don't have the screen shared, sorry. You're seeing my face instead of the screen. So let me just show you once again. Dollar Swiss here at 95 fell to 94.75, below the range of this line that's provided support. Next level to watch, I think, is 94.50. Let's just put a line here to make it clearer. And then, of course, a big level below is right here at 92.50. Okay, Euro Swiss talked about this range. A dip out of the very narrow range, 108.70 to 110. 108.20 is the level to watch, but it's a very uninteresting pair to my opinion. Euro pound made it all the way almost to 75, as you can see here, and then it fell. Now we're seeing it at 73.88 because of this fall in the euro, because of what the Austrian central banker Novotny said earlier, okay, about more QE in the eurozone. Okay, Euro Swiss also falling because of the fall in the euro. So we've seen the yen in previous days relatively stable and the euro gradually moving higher. So we saw the pair touch 137. Real resistance, I see it at 137.53. Anyway, now we're back to the previous range, 135.40. I don't see it as a big fall, just a return to range. 134.20 and 133.15 are the next levels. Pound yen, one of your favorites, is down because of the stronger yen, but still in range. 183.30 at the moment, just under that. Support at 182.50. All in all, what's the trend here? Do we look at the lower highs here, or do we look at this uptrend? What do you think? Anyway, a lot depends on what the Bank of Japan does at the end of the month. We have a question from ERC. Another question: how can one trade this earnings season? Regarding stocks, I don't follow particular stocks. We should watch out for big headlines regarding big stocks. Like yesterday, we had Walmart reporting a disappointing figure, and I think also warning. So Walmart has so many stores in the United States that, of course, its business depends on its managers as well. If the managers do a good job, it makes more money. If not, they make less money. But it also sort of serves as a barometer, as a bellwether for the larger U.S. economy. And yesterday, this poor report from Walmart sparked talks about a recession in the United States. I think it's a bit too early to talk about a recession, but anyway, that's sort of a big stock to watch. I wouldn't follow Apple because it depends on the iPhones. If it has a new version, it sells more. I don't think it reflects the US economy. It's more of a global company. So companies, Caterpillar is a good company to watch, and perhaps Cisco, but I would just use this information on the sidelines of what's going on in markets. For Forex, what's important is central banks, central banks, and central banks. A question from Toll. Based on the dollar weakness and the sell-off of the euro today, caused by the dovishness of the Austrian banker, I expect euro dollar to hover around 114, 115 next days. Your thoughts? Let's look again at euro dollar. Yeah, 114.60 still is the critical line because it was double top and 1,000 pips above the low. So I'm looking at this line for guidance. And yeah, 115 is above this line. We've seen the pair just reach 6 pips below this line, below 115. And on the downside, I look at 113.75. So yeah, so more or less what you're saying. Two things. One thing to watch today is the CPI figures from the United States. If the core CPI remains around 1.8, I think it's good news for Euro bears. If it falls, then it's bad news. Of course, it's good news for the Euro bulls. And tomorrow we have final inflation data from Europe. It's not that important because it doesn't change too much. It's not expected to change too much. We'll talk about it tomorrow on the show. It's released just after the show tomorrow. But let's just take a peek at that because it also can determine. So year over year, we're expecting a confirmation of minus 0.1 and core inflation 0.9. Okay, so these are the big factors to watch. In any case, I see euro dollar as hesitating. Again, the ECB does not like a strong euro. So each time the euro weakens, we hear stuff like that from Novotny, from Draghi, from Peter Pratt. Who else? Well, we have so many. We have 23 members, if I'm not mistaken, in the governing council. But these are sort of the voicier figures. Jens Weidmann of the German central bank, he's always hawkish, but if he becomes dovish, it's a sign to sell euros. Peter Pratt is more of a dove. If he's hawkish, it's a sign to buy euros. But I think that that the ECB wants to depress the euro. Okay. Any more questions? Soon move to the wrap for today. Just bigger themes in markets. Yeah, just what we had earlier this week. Poor Chinese trade balance hurt the Aussie dollar. UK inflation was weak, it hurt the pound. German zoo indicator was weak, it hurt the euro only temporarily. And then things became better. On Wednesday, we had poor Chinese CPI, but the Aussie suffered. But then employment data was not too bad in the UK, and the pound recovering. US retail sales, that was the big event. That sort of hit the dollar very, very hard. And Australian employment data was poor, but everybody looked at it with a grain of salt. And today, US inflation is also an important event. Okay, so I think it's time to wrap it up and begin from the beginning. This is the wrap up of the live market open for Thursday, October 15th. We had quite a few developments in markets, namely the crash of the US dollar, mostly related to US retail sales, but also to an accumulation of comments, dovish comments from Federal Reserve officials. This was accompanied by a fall in PPI, and it resulted in a fall of the dollar. So we had pound dollar surging all the way to 155, dollar yen finally falling out of range, reaching a low of 118.09, a bit out of 118, 120, 120 range. Dollar CAD fall below the double bottom of 129. Aussie dollar, despite weak employment figures, managed to continue its rise. 73.60 is a critical line. 74 is the next line. 72.80 is important support, significant support. Kiwi dollar, one of the best performance, rose up to resistance at 69, enjoying this weakness of the US dollar. Standing out is the euro. It did manage to creep up and eventually make a more significant break above this critical level of 114.60, reached a high of 114.94, but suddenly crashed earlier this morning. That's because ECB member Ewald Novotny of the Austrian Central Bank, Austrian, not Australian, said that the ECB is ready to do more. They're basically failing on their mission to have inflation at their target, which is defined as 2% or a bit below. So that was the critical blow for the euro. Let's see how it pans out with 114.60. That's really the critical level. Today we have quite a busy day ahead of us. We have US CPI, Consumer Price Index, expected at 12:30 GMT. The critical number to watch there is headline core CPI. Core CPI year over year. 1.8 is what we've seen last month, and that's what we're expecting today as well. It's accompanied by US unemployment claims, which has been quite stable, the Empire State Manufacturing Index, then at 2 GMT, the US Philly Fed Manufacturing Index, which was terrible last time. Let's see if it can recover. And then two central bankers from the FOMC, from the United States. The more important one is Bill Dudley, because he's from the New York Fed, because he's a centrist, and because his comments in August sort of hinted about the move in September and no hike. So let's see if he reacts and talks off a Fed rate hike in December. That could be another blow for the US dollar. And then we have, of course, weekly crude oil inventories for Canadian traders and New Zealand CPI for those trading the Kiwi. So I think we have very interesting markets. It's a busy week. Let's see if the US dollar can continue falling, if the euro remains vulnerable or not. Again, I thank FX Read for the show. I thank everybody, lots of you, and in the chat room. Looking forward to your questions like every day. We'll be here tomorrow at 8 GMT as always, digesting all the news that we'll get today and preparing for the close of the week and talk about next week as well. So thank you very much, everybody, for coming to the show. I wish you all safe and successful trading today, and see you tomorrow. Thank you, and bye-bye.